Senate Committee on Banking, Housing, and Urban Affairs will come to order. We have a quorum present, so we'll enter into executive session to conduct committee business. Today, we'll mark up two pieces of bipartisan legislation. S-1271, the Fentanyl Act, the original bill offered by Ranking Member Scott and me, the Recovering Executive Compensation Obtained from Unaccountable Practices, the Recoup Act. These bipartisan bills we'll consider today will make our communities safer by helping stop the flow of dangerous fentanyl into our neighborhoods, and will make our economy fairer by holding bank executives accountable for their failures. Both bills are collaborations. Ranking Member Scott and I have taken feedback and ideas from members on and off this committee. We talk, we listen, we negotiate in good faith with each other on both bills. I particularly thank his staff and my extraordinary staff, not that his isn't extraordinary too, but I know mine better, for their work together. I want to thank all of our members. Every one of the members of this committee was involved. Committees come together to address one of the most significant crises of our time, the flood of dangerous illicit fentanyl that is taking thousands of lives and devastating communities in Ohio and South Carolina and around the country. Senator Scott and I listen to law enforcement and community leaders. We listen to advocates for Americans struggling with addiction. We work together to introduce the Fentanyl Act. We've nearly every member of our committee and more than half of all senators as co-sponsors. We're on the cusp of 60 co-sponsors, half at each party. We have a broad outside coalition pushing for this bill, everyone from the American Association for the Treatment of Opioid Dependence to the National Sheriff's Association to the Fraternal Order of Police. It's an issue that hits home for each of us. In 2021, fentanyl was involved in 80% of Ohio's unintentional drug overdose deaths. I hold roundtables all over the state, and I know my colleagues do too in their states. I hear over and over from Ohioans from all walks of life that we need new, more powerful tools to prevent the flow of this awful, increasingly more potent drug into our communities. It's why our bill uses our economic arsenal to target the foreign fentanyl supply chain, from the Chinese chemical suppliers to the Mexican cartel distributors to the money launderers profiting off the illicit drug trade. I want to thank my colleagues for joining this bill and look forward to continuing working with all of you to get this signed into law. We'll also consider the Recoup Act. This bill is part of the committee's response to the historic bank failures earlier this spring. Throughout the spring, we held hearings bringing before the committee the executives of these failed banks, the bank regulators, and experts on bank accountability. Republicans and Democrats alike agreed these executives failed at the basics of bank management, that they pushed an unsustainable business model because it increased short-term profits in their own compensation, that they ignored directives and warnings from regulators, that they took risky bets at the expense of their customers. They paid themselves bonuses right up until the moment the FDIC was forced to step in. American workers and their families should not be forced to pay the price for executives' risky bets that don't pay off, whether they're on Wall Street or whether they're in Silicon Valley. To most Americans, the lack of Wall Street accountability tracks with their entire experience with our economy. Workers face the consequences for bad decisions made in corporate headquarters. We know that. Executives who made these decisions too often ride off into the sunset with their bonuses and their stock options in tow. Americans will never forget that, by and large, the Wall Street executives who caused the 2008 financial crisis faced few consequences. Their profits, their bonuses were not clawed back. We will not let that happen again. Our bill with Senator Scott ensures that bank executives will face real accountability for gambling with customers' money. The bill does several key things. It will strengthen regulators' ability to ban or remove executives who fail to appropriately oversee and manage their banks. It will provide the FDIC authority to claw back compensation of failed bank executives, senior executives. It will increase and strengthen penalties against bad actors. It will require banks to adopt corporate governance and accountability standards that promote responsible management. Bank executives who take on too much risk and crash their banks shouldn't get to land on their feet. They shouldn't get to keep the profits they made by making bad bets with other people's money. They shouldn't get to take their bad behavior to another bank. I want to thank the members on and off this committee who introduced different bipartisan bills to address this problem. I thank Senator Warren and her co-sponsors. I thank Senator Reid and his co-sponsors. They're with bipartisan support on each bill. Their work to help generate ideas, build momentum for action, and advance these efforts. I want to thank Senator Scott and his staff for working with my staff and me. We have bipartisan agreement on a comprehensive bill that cracks down on irresponsible executives who poorly manage their banks, who put customers and workers and the entire economy at risk. That tells me the ranking member and I have threaded the needle pretty well. Senator Scott.
Thank you, Chairman, and thank you for your hard work on this legislation. And frankly, thank you to your staff, and certainly my staff is amazing. I know that this legislation came together. We were working on the amendment process as late as 3:30 in the morning, and I thank my staff for their hard work, their dedication, and certainly their willingness to take into consideration not Republicans or Democrats, but the American people. At the end of the day, both of these pieces of legislation, the goal of the legislation is to make sure that we, A, have a more responsible response from bank execs, B, that the 70,000 Americans who lost their lives to fentanyl, their families understand that we're serious about stopping the flow of fentanyl. I'll say that this is our first markup since 2019. Since becoming the ranking member here on the Banking Committee, I've repeatedly underscored the importance of regular order, or allowing our committee to debate and negotiate bills under our jurisdiction. This return to regular order is long overdue, sorely needed, and certainly celebrated. Today, we consider two common sense pieces of legislation. First, my Fentanyl Eradication and Narcotics Deterrence, or Fend-Off Fentanyl Act. This bill will direct the Department of Treasury to use our economic sanction tools to choke off the profits of the Chinese precursor manufacturers and Mexican cartels that push fentanyl across our border, leading to the deaths of more than 70,000 Americans. I talk a lot about opportunity in this country because it provided me with remarkable opportunities. But the deaths represent the loss of opportunity to fulfill one's purpose, to contribute to their own communities, and to achieve their version of the American dream. That is why I'm especially proud that the committee will take up my Fend-Off Fentanyl bill. It's past time we sanction the manufacturers, the exporters, and the cartels that traffic and sell this poison by hitting them where it hurts the most, their bank accounts. Over 70,000 Americans died just last year, an all-time high, fueled by Mexican cartels trafficking these drugs across the wide open southern border that this administration refuses to close. Again, these precursors from China are manufactured in labs in Mexico and are smuggled across our southern border and ports of entry by the Mexican cartels. Virtually all of us in this room know family members and or families in our communities who've lost a loved one. I've often spoken about my friend Alan Schall, former business dean at the College of Charleston, whose son at 27 years old, Alan Schall II, lost his life to fentanyl. It's a pain that no parent should ever experience, the pain of burying your kids. While nothing we can do here will bring back those we've lost, we should do something and everything we can to stop the flow of fentanyl into our communities so other families don't have to experience the same pain of the Schall family. So I want to thank the chairman and all the members of this committee for joining me in this effort. Today, we get one step closer to getting Fend-Off Fentanyl across the finish line and hopefully saving thousands upon thousands of American lives. Moving on to the second bill today, the Recoup Act. This bill represents a common sense solution that will protect the American taxpayer from holding the bag when bank mismanagement runs rampant and seeks to hold the leadership of failed banks accountable by requiring common sense corporate good governance requirements. And as we saw in the failures earlier this year, the bill would penalize bad actors for their gross negligence. Immediately after SVB and Signature Bank failed in March, I said that this was nothing short of a failure in three parts. First, the bank executives certainly mismanaged their banks. Second, a failure of the supervisors to do their jobs. And third, the Biden administration refuses to curb the reckless spending, which fueled the highest inflation we've seen in 40 years. That historic inflation led to 10 interest rate hikes in a little more than a year and soaring costs for everyday families. As I understand it, shortly after the collapse of SVB, the CEO, Greg Beckler, fled to Hawaii while the American people were left holding the bag for billions, and now our institutions who did nothing wrong are having to pay the price for it. That's not right. There is little disagreement that these bank executives were completely derelict in their duties. In order to hold bank execs who act in a grossly negligent manner accountable, the clawback authority in this bill is tailored in that it applies to incentive and equity-based compensation in the event, and hopefully there won't be, another grossly negligent failed bank, thereby incentivizing bank execs to run their institutions in a prudent manner so the American taxpayer is not left footing the bill. There is a lot of press about these executives selling their stocks and taking bonuses days before the failures. That can't become the standard. But that only addresses part of the issue. Through the adoption of our manager's amendment, this bill will also shine a light into the black box of our regulators and how they operate in bringing much needed transparency and accountability for the American people so that they can be confident that their bank supervisors aren't asleep at the wheel again. The Recoup Act is a common sense solution to address accountability, and it is tailored to protect the American taxpayer. I look forward to discussing and marking up this bill, both of these bills, and which are important and timely legislation.
Thank you, Ranking Member Scott. We have a quorum. I'll start with call up S 1271, the Fend-Off Fentanyl Act. First, like to call up amendment number 1 offered by Ranking Member Scott and me. It's an amendment in the nature of a substitute to S 1271, making technical changes to the bill. I turn to Senator Scott. Any additional comments? I asked the Brown-Scott amendment number 1, the substitute amendment, be adopted and considered as original text for purposes of further amendment. Any objections? Hearing no objection, it's so ordered. The amendment's adopted and is so modified. Any member wish to offer amendments? I'm sorry, I will call up amendment number 2 as modified, a manager's amendment offered by Ranking Member Scott and me. This amendment concludes Menendez number 6 is modified, Daines number 9 is modified. These amendments will be included in this amendment in block. The question is on amendment number 2 is modified. Is there objection? Objection heard. Okay, all in favor, say aye.
Aye.
Nay? Okay, the ayes have it. Would any member like to be recognized to discuss the amendment on Fend?
Chairman.
Senator Daines?
First, thanks for presenting this legislation for markup. The fact it has 60 co-sponsors, including myself, I think speaks not only about the legislation, but about the drug crisis facing this nation. I'm concerned about this administration's track record of using general licenses to gut the effectiveness of sanctions regimes that are authorized by Congress. One of the most egregious examples we've seen is General License 8, which has effectively nullified energy sanctions imposed on Russia for invading Ukraine. Because I believe in the pursuit of this legislation, the need to stem the fentanyl crisis in this country, I draft Amendment 9, which would have required Senate approval for any general license used for exemptions. I appreciate working with the chair, as well as Ranking Member Scott, on Amendment 2, which provides a pathway to creating transparency as to how and why certain entities receive exemptions and why others don't. I think this language strengthens the legislation. I appreciate the work of this committee. Thank you, Mr. Chairman.
And you are not offering your amendment, correct? Okay. My understanding is Senator Warnock has an amendment he would like to discuss or offer. Warnock, Senator from Georgia.
Thank you, Mr. Chair. I would like to call up my amendment, Warnock 12. And thank you for your work on this critical legislation. I agree that we must address the opioid epidemic. That is clear. It's claimed thousands of lives in Georgia and all across the country. However, we have lived with the war on drugs for decades. Rather than reduce illegal drugs in our communities, we've actually declared war on many of our communities themselves. I've seen the impact of this up close as a pastor, as a member of the community. The United States of America, the land of the free, as a result of this misguided approach, is the mass incarceration capital of the world. And it stems in large part from our failed war on drugs. It's been a war on these communities. And so while I believe that we must fund law enforcement, which is at the front lines of illegal trafficking, I also believe that we must fund treatment, recovery, and diversion programs for those suffering from substance use disorder. And that's why I'm offering a simple amendment that would broaden the permissible uses for any forfeited funds to include funding for the Substance Abuse and Mental Health Services Administrations. It doesn't remove any eligibility for law enforcement, but by expanding the uses of this funding, it allows the federal government to take a more holistic approach to this problem. And it would allow the funds to curtail the demands for drugs and work to mitigate the damage caused by opioids to our communities. While I understand this amendment is outside the scope of the Banking Committee's jurisdiction, today I will vote to advance this bill with the hope that the chair and the ranking member will commit to working with me to address this important issue for our communities as this bill progresses to the floor. With great concern for these issues, which I'm committed to continuing to work on, and hopefully the chair and the ranking member will work with me, I will withdraw my amendment. Thank you, Chair. I yield back.
Thanks, Senator Warnock, as you and I have discussed privately, and I, of course, will work with you on that. I wholeheartedly agree with the comments you made. We must look at funding additional programs to address substance abuse treatment and prevention. I look forward to engaging in additional outreach to other committees of jurisdiction on the specific proposal. Senator Scott.
Thank you. Good.
Hey, Senator Scott, for comments. No, okay, got it. Thank you, Senator Warnock. Any other amendment? Any other member have an amendment? Unless any member wishes to offer additional amendments, I now move that the committee favorably report S-1271, the Fentanyl Act as amended. The clerk will call the roll.
Mr. Chairman,
Aye.
Mr. Reed, Mr. Menendez, Mr. Tester, Mr. Warner,
Aye.
Ms. Warren, Mr. Van Hollen, Ms. Cortez Masto,
Aye by proxy.
Ms. Smith, Ms. Cinema,
Aye.
Mr. Austin. Oh, I'm sorry. I'm sorry, I lost my place.
He thinks of you now.
Mr. Warnock,
Aye.
Mr. Fetterman,
He also thinks
Aye.
it's awesome. It's awesome. He's awesome.
Mr. Scott,
You two
Aye.
also look very much alike.
Mr. Crapo. Mr. Rounds. Mr. Tillis. Mr. Kennedy. Mr. Haggerty.
Aye.
Ms. Lummis. Mr. Vance. Ms. Britt. Mr. Kramer.
Aye by proxy.
Mr. Daines.
Aye.
Mr. Chairman, the vote is 12 in favor, 11 against.
No,
Oh,
no. 23.
Sorry, Mr. Chairman, the vote is unanimous. I apologize.
I know you're used to seeing things 12-11, right? 23 ayes, no nays. The ayes obviously have it. With this vote, this bill is amended. Is hereby ordered favorably reported to the full Senate. I ask unanimous consent the staff be allowed to make technical and conforming changes that the Corden rule be waived. Hearing no objection, it's so ordered. I will now consider the Recoup Act. I'll call up amendment number 2, a manager's amendment offered by Ranking Member Scott and me. This amendment includes Brown number 3, Scott number 4 is modified, Lummis Smith number 5, Vance number 9 is modified, Kennedy number 14 is modified, Reed number 17 is modified, Tillis number 34 is modified, Cinema, Tillis, Lummis number 36 is modified. These amendments will be rolled up into amendment number 2 in block. Senator Scott, would you like to comment? With that, the question is on amendment number 2 is modified. Those in favor say aye.
Aye.
Those opposed say nay. The ayes have it. The amendment is agreed to. Would any member like to be recognized to discuss an amendment to recoup? What's that?
Mr. Chair,
Yes, Senator Tillis.
Oh, I'm sorry. I don't know if I'm in order to go ahead and move forward with an amendment or offer an amendment.
If you have an amendment, certainly.
Well, the bad news is I'm going to talk. The good news is I'm going to withdraw 31 through 33. 34 was incorporated in the manager's amendment. You know, I felt very strongly when we had the oversight hearings on Silicon Valley Bank that the fact patterns that led up to that and the management malpractice we need to have some accountability. And I do believe that we have to work in that direction. I'll talk about that in a minute. But I also think in that same series of hearings, we heard about all the supervisory failures. We seem to be forgetting about I think the two main instances are the two main factors that led to it: management malpractice and supervisory malpractice. We need to get to that, which is one of the reasons why I wanted to offer amendments to give us more transparency with the Fed. It's why I also supported the Financial Regulators Transparency Act of 2023, which was really the basis for the amendments that I've offered and will withdraw. But on the subject of the bill, I still feel like there's a lot of work to be done. There are some amendments from my colleagues that I'm going to support, because I still think it's too expansive and we're not making the distinction between management malpractice, bad management decisions, and management malpractice. And if we're not careful here, you're going to stifle innovation. You're going to provide reasons for people to pursue a position other than the C-suite that may have good ideas that just fail. That's not malpractice. That's just a management decision that didn't bear out. I think this bill is too expansive. I think it has been refined substantially since the first version that I saw, but we still have a lot more work to do. And so, Mr. Chair, like I said, the good news is I will be throwing my amendments. Thank you.
Thank you, Senator Tillis. Senator Sinema is recognized from Arizona.
Thank you. I just want to say a huge thank you to both the chairman and the ranking member for the work they've done on this piece of legislation. I'm very pleased that the Sinema Lummis Tillis amendment was included in the manager's package. Our amendment seeks to hold the Federal Reserve accountable for the cultural and operational changes that are needed and in order for it to be successful in the future. But at a larger level, Mr. Chairman and Ranking Member Scott, today's bipartisan success is an example of what happens when people with different viewpoints are willing to talk with each other, hear one another, and find the common ground. I know it wasn't easy to get to this compromise, but it is the work that the American people have asked us to do. So I want to commend you and your teams for the strong leadership on the important issues on both the bills today. And I'm really looking forward to more markups like this one. Thank you. I yield
Thanks,
back.
Senator Sinema. Anyone else? Senator Vance of Ohio is recognized.
Mr. Chair, I want to thank you and the ranking member for your work on this, and just make a note about the amendment that you guys included in the manager's package, for which I'm grateful. We have a problem in this country, and the problem is that a banking system that I think has largely worked pretty well for a lot of small businesses, the mid-tier banking system that has the three-tier banking system, I should say, where you have the big banks, of course, you have a lot of regional banks that do important financial services, but you also have community banks that do a lot of lending services that nobody else is willing to do. That system is under threat, and you can see it in the numbers of deposits that are migrating to the big banks, and you see it in a lot of other ways as well. One of the things I'm very worried about, of course, is the regulatory burden of our financial system falls heaviest on the small and mid-sized banks. And the amendment that we proposed effectively would mean that if the FDIC takes a bank into receivership, we only allow a massive bank to buy the failed bank's assets unless there's no other alternative and there's no other buyer on the table. One of the things that we learned from the SVB crisis and much of the fallout is that the big banks have a lower cost of capital. They're able to absorb these things. But if that leads to concentration, and if we don't do anything to stop it, we're going to wake up in a country that has 3 or 4 massive banks and no small and regional banks for our financial system. That's a disaster for our country. It's a disaster for our small businesses and our consumers. And I think that we should do more, not just this amendment, we should do more to try to preserve the regional banking system in our country. I think it's good for our people. It's good for our country. And we don't want to be like Europe, where they just have 2 or 3 massive national banks and no other alternatives for their consumers.
Thank you, Senator Vance. Senator Reed of Rhode Island is recognized.
Thank you, Mr. Chairman. Let me commend you and Senator Scott for the outstanding work you and your staffs did. this is an important piece of legislation. I had an amendment number 18 that would have broadened the clawback, not just for inside directors, i.e. those that have a position within the bank of management, but all directors. It turns out that Silicon Valley Bank had 11 directors. One was an inside director and 10 were not. I think we can work going forward to see if we could improve that situation, because without every director on the board being sensitive to the issues of management and understanding responsibilities and liabilities, I don't think we're going to be as successful as possible. I thank you for including my Amendment 17, and I certainly will not ask for a vote on 18. Thank you.
Thanks, Senator Reed, and I thank you for the legislation that you and Senator Grassley introduced that would help to launch this discussion, similar to the legislation that Senator Warren and Cortez Masto and Vance and Britt introduced to get this discussion front and center. Senator Smith, I think, has comments. Oh, somebody on your side. Okay, Senator Haggerty is recognized.
Thank you, Mr. Chairman. One of the most, thank you. One of the most critical elements of competitive advantage that we enjoy as a nation is the strength and depth of our capital markets. I want to do everything I can to make certain that we retain that competitive advantage, in fact, strengthen it. I'm all for accountability, but I also want to make certain that we're doing everything we can to ensure supervisory competence. What we've seen in the wake of Silicon Valley Bank's collapse to Signature is a real question in terms of the competence and the dereliction of duty, in my view, of some of our supervisors and people that ran an auction with the FDIC. We need to create a regulatory environment that does not introduce more uncertainty into the U.S. economy, one that creates greater certainty. And we need to have legislation and ensuing regulations that also support our competitiveness and our ability to attract and retain the greatest talent we can possibly get in this arena. Therefore, I'd like to offer and also withdraw my amendments Haggerty 21, 22, and 23 for the record. Thank you.
Thank you. Thank you, Senator Haggerty. Senator Smith's recognized.
Thank you, Mr. Chair and Ranking Member. I want to just add my thanks to both of you and your staff for the great work in putting these two pieces of bipartisan legislation together. And I also want to thank Senator Warren and others in a bipartisan way for the work that that you did, again, in a bipartisan way, to lift up this issue of greater corporate accountability. I want to also thank Senator Lummis for working on the amendment that we worked on together that's included in the manager's package. The public reports issued by the Fed and the FDIC following the failures of Silicon Valley Bank and Signature Bank provided a really valuable insight into the circumstances that led to their collapse. These included candid assessments of regulatory deficiencies and supervisory shortcomings of the regulators themselves. So public reports like these will not only increase transparency and trust, but they will help allow us to make informed decisions about how to prevent future crises. So I thank you very much for including this amendment in the manager's package.
Thank you, Senator Smith. Senator Lummis is recognized.
Thank you, Mr. Chairman. And I want to add my thanks to you and Senator Scott for your bipartisan work on this. A lot of the amendments that are being offered and withdrawn could be the subject of another bill in the future. Because a lot of good ideas have been brought to the table and withdrawn today in the interests of comity that has brought this committee to its first markup since I've been on it. I too will be offering and withdrawing Lummis Amendment 7. While the FDIC is responsible for the orderly resolution of failing banks, it's not the primary regulator for most of the institutions with assets over $10 billion that are subject to this bill. In many cases, the FDIC steps in as the resolution authority with little to no prior interaction with the management of a failing financial institution. State banking regulators, the Federal Reserve, and the Office of the Comptroller of the Currency are often the most familiar with the management of an institution, the culture of the institution, and how responsive management's been to supervisors' concerns in the lead up to a failure. So that the FDIC has the advantage of this perspective, this amendment would require the FDIC to consult with the appropriate federal or state banking supervisor prior to clawing back compensation. And the consultation period, I suggest, is limited to 14 days. I believe in transparency. I agree with other members who have suggested that having the regulators deeply involved in these decisions actually will make for better decisions. I will not be offering this amendment because of the agreement that has been reached by this committee. And I again want to thank the chairman and the ranking member for bringing this bill to a vote today. I withdraw.
Thank you, Senator Lummis. Senator Warren of Massachusetts.
Thank you, Mr. Chairman. I want to start by saying I'm glad that this committee passed the Fend Off Fentanyl Act. But if we want to have a real impact on fentanyl trafficking, we also need to cut off the money supply. We were in a hearing a couple of weeks ago in which we heard about 90 Chinese companies that are sending the precursor drugs to Mexico, where they're mixed up then into fentanyl and shipped around the world and to the United States. To be effective in the fight against this, then we need to deal with the crypto payments that have become the payment of choice for these drug traffickers. This is what our law enforcement and national security experts agree, that crypto is becoming the payment of choice, and this committee needs to deal with better money laundering rules for crypto. But let me return to the Recoup Act. Today, this committee takes up legislation to hold bank executives accountable when they blow up their banks. And I am particularly grateful to Chair Brown for his leadership on this issue. As chair of this committee, it is clear that he is committed to fundamental fairness and to a banking system that doesn't just work for the wealthy and well-connected, but that works for every American. Since March, our financial system has experienced the second, third, and fourth largest bank collapses in American history. Our current laws reward executives like the ones from First Republic and SVB and Signature, who placed risky bets with customers' money, boosted short-term profits, scooped up huge bonuses and salaries, and walked away rich when their banks exploded and threatened the stability of the entire banking system. When SVB Bank failed in March, both Republicans and Democrats came together to introduce the Failed Bank Executives Clawback Act. I want to offer special thanks to my early bipartisan partners, Catherine Cortez Masto, Josh Hawley, and Mike Braun, who helped draft that first bill. Our bill won substantial bipartisan support. 11 of us, both Republican and Democratic members of the Banking Committee, then reworked the bill and joined in. I want to thank J.D. Vance and Katie Britt and Kevin Kramer for their careful work in getting the details right and helping build a larger bipartisan coalition. When drafting that bill, I felt, as I do now, that legislation to claw back multi-million-dollar compensation from failed bank executives needs to be ironclad, tough enough to cover every bad actor, tough enough so that all types of payouts that they collected while running a bank are covered, and making sure that the multiple years of bad behavior that add up to catastrophic bank failures are also covered. It is critically important that our bank rules are also tough enough to withstand pressure from an army of bank lobbyists and financial industry lawyers who fight to weaken every regulation and create exceptions to every effort to hold banks and bank executives accountable. There is more that we need to do, much more, but the Recoup Act is a reasonable compromise that significantly improves the oversight of bank executives. It will help make the banking system safer for all Americans, and every member of Congress in both the Senate and the House should support it. I am proud that this committee has answered President Biden's call for greater accountability, and I hope we can get this done quickly.
Thank you, Senator Warren. Senator Kennedy.
Thank you, Mr. Chairman. Get that back up for me. Mr. Chairman, with respect to to the banking bill. I have two amendments. I'm going to withdraw both of them and hope that you and our ranking member will continue to work with us to try to make this bill better. My first amendment, which I would like us all to consider as this bill moves to the floor, is to index the $10 billion community bank threshold to inflation. This bill does not impact community banks. Community banks are defined as being $10 billion or less. I would like to index that to inflation. The second amendment, which I know has a germaneness issue, which I think can be worked through. I can best demonstrate with an example. If I'm an insider at an American company and I sell my stock, I've got to notify the SEC within 2 days, and I've got to do it electronically. And almost all insiders do it in 1 day, and it is immediately posted so the world can know on their website. If I'm an insider at a foreign corporation listed on an American exchange, I don't have to do that. If I make a trade as an insider of a foreign corporation, I've got 30 days, and I don't have to do it electronically. I can mail it in, and it's never, ever posted. Why does this matter? Because there are trades by insiders in a global economy of foreign corporations' shares listed on American exchanges every day that people don't know about. I'll give you an example. You remember the issue with Ant Group. Alibaba is an affiliate of Ant Group. Ant Group wanted to go public. Everybody knew that if Ant Group went public, the price would go through the roof, and so would the price of Alibaba. There's just one problem. President Xi Jinping got mad at the head of Alibaba, and he told the Ant Group, the affiliate of Alibaba, that they couldn't go public. Well, the day before the announcement was made by China that they weren't going to let Alibaba go public, an insider at Alibaba sold $150 million worth of Alibaba stock. And of course, as soon as the announcement was made that Ant couldn't go public, the value of Alibaba went through the floor. And other shareholders never knew about it. Now, my amendment would just say foreign insiders have to abide by the same rules as domestic insiders if you want to list on an American exchange. And I would be grateful, Mr. Chairman, and send you a fruit basket if you would commit to work with me. I'll even throw in a personal pan pizza. And if you would commit to work with me, you and the ranking member, to get these amendments on. Dominoes.
Senator Warnock just asked me to work with him. I said yes. I don't think we can be this transactional in this committee. So if you'd only ask me in a nice way without offering anything, Senator Kennedy. Thank you. Anybody in the side? Senator Van Hollen.
Thank you, Mr. Chairman. And I just want to second the request from Senator Kennedy on the second amendment. We teamed up on earlier legislation called Holding Foreign Companies Accountable, which passed the Congress. It's law, which ensures that foreign companies play by the same accounting rules that American and other companies apply when they're listed on this exchanges. This is the sequel to it. Glad to partner with Senator Kennedy on it again. And I really do think it's likely to have very strong, if not overwhelming, bipartisan support to move it forward. And let me just take this opportunity to add my word of thanks to you and the ranking member for working out this legislation to hold executives, bank executives accountable when their own negligence contributes to the collapse of banks and leaves public entities like the FDIC having to hold the bag. That's wrong. And I know that that's a bipartisan view of this committee is reflected in this legislation, indicates that. So thank you and the ranking member.
Thanks, Senator House. Senator Daines is recognized.
Chairman, thank you. To be clear, I'm not offering a fruit basket or a pizza this morning, but I would like to
That
call
was
up.
personal pan pizza.
But the record states a personal pan pizza. But I would like to call up Daines Amendment 35, which would require annual testimony of this committee on the CDFI fund. The problem with bureaucracies is there's nothing compassionate about a bureaucracy. There's typically nothing efficient about a bureaucracy, particularly a federal government bureaucracy where there are no competitive forces, where they're rather captive audience, captive customers, the taxpayers, to find recourse because they can't go anywhere else but to the Treasury Department regarding CDFI funds. I support CDFIs. Thanks to this fund, we've seen a lot of great investments made across this country for businesses, nonprofits as well. But I'm hearing frequently about the lack of responsiveness, lack of transparency within the program for key stakeholders. The fund has been in a blackout period since October. There's no clear date when they're going to accept any new applications. In fact, for some institutions, they've had to wait as long as 18 months to get a decision on their application. In an environment of volatile interest rates, this is unacceptable. Treasury needs to provide greater transparency, just communicate. We are the recourse to hold these bureaucracies accountable. So that said, I'm not going to be pushing for a vote at this time. I'll be withdrawing my amendment, but I want to bring this to the attention of this committee as well as Treasury.
Thank you, Senator Daines. We don't debate on with withdrawn amendments, but I know Senator Warner just.
I just want to very briefly, there's a broad bipartisan group on this committee that is working on CDFIs. I think this is a piece of the financial sector that needs more attention. I really appreciate Senator Daines' amendment and look forward to working with him on that on a different time. Thank you.
Thank you. Anyone else have amendments or comments?
Just a quick comment.
Briefly from both of you and the guy next to you.
I just have a letter that's trying to better describe the difference between management malpractice and a bad management or a decision that ended up with a bad result from the Bank Policy Institute. I'd like to submit for the record.
Without objection.
And, Mr. Chair, the last thing is just to, I talked to my staff this morning before the meeting. I said, did you have a late night? He said, not near as late as the committee staff. So in addition to thanking you all for your leadership on improving the bill, I want to thank the committee staff. I suspect they'll sleep well tonight and they're great to work with.
Thank you. And I concur with that. They had late nights and early mornings both. And I said something to my staff today, but tomorrow is Chair Powell's testimony. So the good night's sleep will probably be Thursday night for them without getting anybody's personal lives. Shauna and Laura and Alicia and all of you. Senator Kennedy, briefly.
Mr. Chairman, Raphael made some comments, which I thought were very appropriate about fentanyl users, but I wanted to point out to the committee with respect to fentanyl dealers, in federal court, to get a 5-year minimum sentence as a dealer, you have to have 40 grams of fentanyl. That's enough to kill everybody about 100 times in this room. To get a 5-year minimum as a dealer for crack, you only need 28 grams. For LSD, 1 gram. For meth, 5 grams. So we've got it backwards. The most lethal drug requires the most quantity to be treated as a dealer. And I suggest at some point we're going to need to address that, Mr. Chairman.
Thank you, Senator Kennedy. Senator Scott would like to say a few words before we bring the bill up for a vote.
Just wanted to thank my committee members, Chairman as well, for the hard work on this legislation, number one. Number two, obviously, if you're listening at all, you hear that the work that we need to get accomplished isn't done yet. There are a number of amendments that have been withdrawn, and I thank my fellow colleagues for engaging in such an important and deliberative process to get to a place where we have legislation that is focused on the bank execs who are responsible and the chairman of the board, as well as bringing light to the supervisory process and the failures that we've seen within the supervisors as relates to SVB and Signature Bank. I think it's incredibly important for us to have legislation that is not expansive, that frankly does focus on the board, the chairman of the board, and the 5 members of the executive team. And this is specifically the compensation clawbacks are specific to those banks that have failed. I think it's really important for us to note that as I read the letter that is being submitted here today, the compensation clawbacks are specifically for failed banks and not for anyone else. Thank you.
Thanks, Senator Scott. I now move the committee favorably report the original measure of the recovering executive compensation obtained from unaccountable practices. The Recoup Act is amended. The clerk will call the roll.
Mr. Chairman.
Aye.
Mr. Reed.
Aye.
Mr. Menendez. Mr. Tester. Mr. Warner. Ms. Warren. Mr. Van Hollen. Ms. Cortez Masto. Ms. Smith.
Aye by proxy.
Ms. Cinema. Mr. Warnock.
Aye by proxy.
Mr. Fetterman.
Aye by proxy.
Mr. Scott.
Aye.
Mr. Crapo. Mr. Rounds. Mr. Tillis.
No.
Mr. Kennedy.
Aye.
Mr. Haggerty.
No.
Ms. Lummis. Mr. Vance. Mrs. Britt. Mr. Kramer.
Aye by proxy.
Mr. Daines. Mr. Chairman, the vote is 21-2.
The ayes have it. With this vote, the bill is amended is hereby ordered favorably reported to the full Senate. I ask unanimous consent, staff be allowed to make technical and conforming changes and the Corden rule be waived. Hearing no objection, so ordered. Again, I thank all of you for your hard work. Staff, principally, members of this committee and both power parties will now briefly pause so that our witnesses for today's Federal Reserve nomination hearing can make their way to the table. Thank you all.